Hey guys, welcome back to the Hub channel. My name is Brandon and this is my favorite show of the week. We're going to be doing some new high probability short-term live trading with you right now, and you're not going to want to miss what we have to say. Last week we had a trade. We did this trade. We put this trade on, so we're going to be going over that trade. We're going to be going over markets as well as a trade that we have ready for you guys that we're going to be going over right as soon as it hits 7:30 here and the stock market opens. We're going to be getting that trade out there for you. But let's go ahead and bring Mike on. If you don't know Mike, Mike is the founder of Michael Wade Trade Coaching. He is one of my favorite guys in the market. I love his optimism and his way of trading. He does these fast, short-term trades that are high probability, as I said, and they do really well because of the way he puts these things on, and he'll explain those to you in his show today. But Mike, how are you doing, man? How have you been?
I've been great, and this is my favorite show of the week as well, Brandon. I love being here. I mean it. This is so fun to hang out with you, and I get to play with my Mac and wish everybody happy Valentine's Day. And it's just awesome.
I've been told by my wife Valentine's Day was yesterday, even though I thought it was a different day. No, just kidding. She comes in at 11 p.m. and says, "You know what today was?" We took care of all of that. But regardless, let's talk a little bit about the markets. What's happening right now? Obviously, we're still hitting against that 5,000. It dropped down a little bit because of CPI data and other things that were happening. What's your take on the markets right now?
You know what? One of my favorite things to do with a cat is to take a laser pointer, and the cat will go wherever the laser pointer goes. Well, that's what we're doing here. This is what the market's like. It's so skittish. And I want to show you this, Brandon.
Best analogy I've ever heard. Best analogy I've ever heard.
Isn't it though? I mean, especially, we got the markets that are pining for lowered interest rates. And every piece of news is like, if it's considered higher, inflation's rising, the market goes one way. And then this morning, we had some data that came out that was favorable for the market. And that's that retail sales tumbled 0.8% in January, much more than expected. Now, the market believes that when the Fed sees that number, it's more likely that the Fed will cut rates and cool off the economy. So that's what the Fed wants to see. He wants to see the economy cooling off before they cut rates. And just to show you the behavior of the cat chasing the laser pointer, I'm in the Hub software here. There's some really cool charting here. So the sales number came out 0.8% in January, much more than expected. So sales tumbled and up. And that report, guess when that report came out, Brandon? Right there. So here's 500 on the SPYs, which corresponds to 5,000. This magical multiple of 1,000. That's a super duper strong resistance level. The market's like, nah, I don't think so. I don't think so. I don't think so. Retail sales, oh my God, retail sales are tumbling. The Fed might cut rates. Boom. Market goes back up above 5,000 and then not so much. So picking direction now is very tenuous. And we use these lines in the sand, I call them. They are resistance levels. And so far, the other thing you mentioned, Brandon, I didn't point it out, was we were above 5,000 for 2 days. And I said before, I said, we go a couple days above 5,000. I might consider going bullish. And then I saw this upside down bearish candlestick pattern. It's called a hammer, upside down hammer. And I'm like, I'm not buying it just yet. CPI comes out, boom. CPI was hot. Inflation increased more than expected. So it's very tenuous. I would still say, Brandon, and I'd love your opinion as well, we're still in an uptrend for sure. I mean, lower highs, higher lows, higher highs. Everything's going up. You can literally draw a line from there to there, and the uptrend's still intact. So I think longer term we're up, but man, we get reports every week, and one report can move the market pretty much anywhere at this stage.
Yeah, I mean, I agree with you 100%. I'm watching this kind of go down as well, and I just keep going back to your analogy. I love your analogy there. The cat and the laser and things moving around because of that. That's funny. This market it's always behaved this way though too. So that's
Yeah.
interesting to watch that. Trade last week, man. We put on a trade last week. Do you want to talk about that a little bit and what happened there with that trade as well?
I would like
It
to.
was
Yeah.
on. It was on Bob Iger's little company, Disney, correct?
That little company called Disney. Yeah. And
Right.
they came out and blew out earnings, raised guidance. Really, really good news. And we came in and said, all right, well, I think Disney is going to keep going. The market opened right about there. It was vacillating a bit. It dropped a little bit. We placed an order right at 9:35ish or so Eastern time. It filled, and let me show you the fill price. It filled for 13 cents a contract. We did 5 of them. And so we ended up putting $65 of credit into our account while risking 435. And our rules are really simple. Once you're in, you buy the spread back for 10% of what you sold it for. And that in this case was 1 cent. We sold the spread for 13 cents. And Brandon, this happened a couple of weeks ago. And then 40 minutes later, we bought it back for a penny, netting over 13.8% in 40 minutes. Dramatic pause. That's pretty awesome,
I mean,
right?
that was, I mean, the week before. I mean, you've been crushing these trades, and not only these trades, been crushing it with the high probability. Just like I said at the start of the show, they're fast trades. You said 40 minutes on that one.
Yeah.
40 minutes. That's not a bad little trade. 13.8. If you were to annualize that 40 minutes, you'd be up 1 billion% by the end of the year. I don't know if you ever done the math on that. Like 1 billion%. So that's pretty dang good. I think, no, that was a great trade. Obviously, Disney, interesting company, but who cares about the company? And I talked to you a little bit about the company before and after, but that's the best thing about these trades. Who cares? Who cares?
I don't care.
As long as, exactly, you don't care. And you've said that over and over. Who cares? Honestly, the trade makes the trade because of what's happening on the chart and what's happening in whatever. So that worked out perfectly. Right now, I don't know if did you see this too? Retail sales tumbled 0.8% in January. That was Is that going to affect anything going on right now? I mean, I know we're going to be setting up for your trade here in about 6 minutes, but does that affect your trade, sway your trade, or is it more of those who cares type situations?
I don't care. I don't care. I mean, somewhat. I don't care. I don't even care if I know what the company does. I do find out before I place the trade. I'll trade anything. This is like opportunistic trading, like a sniper, safe at a distance, taking shots, and very little chance of getting shot at. We do 1 out of 10, we usually get shot, but 9 out of 10, you're safe. Yeah, and it's any stock, we go after.
Any stock. So let's do this. Tell people where they can learn about your trading, and then let's set up for the trade that we want to put on today. That's very similar to this one right here.
Yeah, absolutely. So first off, my company is mwtradecoach.com, michaelwadetradecoach.com. And what we do is we provide community around people and allow them to succeed at options trading. We do options. That's all we do over here. And Brandon, I didn't tell you this, but in January, we launched a sniper challenge. And the challenge was you gave them a support community where they could communicate. And these people ran the sniper system for a month. And 90% of them, novice traders, beginning traders even, made money. So the system is very, very high probability. It's short term, as the name of the show implies. And we do have a guide, Brandon. And the guide, as you'll see here in a minute, there's a few steps to master. One of them is a credit spread. And, I move live. When I go live, I've got to move a little faster, so I can't slow down and teach as much. But there is a guide that I've written that's comprehensive. It takes you through all of the steps that you'll see me do here live every Thursday. And the idea we have here is that you get the guide and you join us on Thursdays and trade alongside me.
Yeah, that's perfect. That guide is one of the best things you guys could go pick up. It's absolutely free. Am I correct? Anybody can go pick this thing up. Absolutely free. Learn exactly about the strategies that Mike's putting on here every Thursday. Go get that guide. You'll love it. All right, let's set this up. What are we trading today? What are you looking at in the market?
You ever heard of Cisco Systems? Yes, you
Oh
have.
man, that is that. What do you? I was gonna say no, but yeah, of course everybody has. What is
You've been in a
it?
box.
Yeah, exactly.
But this is Cisco, and it's in the tech space. They do networking products, telecommunication products, and the stock has been in a decided downtrend. From here to here, you just connect those lines. The stock's in a downtrend. The reason I like this one the most is there's this blue line here. It's the 200-day moving average. So this is Cisco yesterday's closing price on Cisco. Let's zoom in a little bit now that we've established that it's already in a downtrend. And the stock pre-market is, let me show you this. I'm going to give you a 5-minute bar. And pre-market, the stock's down to 48. That's where it was yesterday. This is post-market. They announced their earnings. They actually beat lowered expectations, which is kind of like a soft beat. They beat, but they already lowered them, dropping the stock previously. So they beat the lowered expectations a little bit, which normally I wouldn't play with these trades. But because they also lowered future guidance and they're cutting 5% of their workforce and it's already in a downtrend, my prognosis is very simple. I don't think that with this bad news, stocks trading right here where my hand is there, it could bounce. I think this is what's going to happen, I believe, Brandon. I think it's going to bounce off 48, come up a little bit, maybe hit 49, go sideways to down. It could recover, but so because of that, the earnings were there. They beat their lowered expectations, so that could be viewed somewhat positive. So we could see institutions coming in, accumulating the stock at 48, which is a lower resistance level, support level, and then we could get a bounce. So I'm planning on the possibility of a bounce, but I don't believe that after this bounce, if it does happen, I don't think it's going to get back up above 50, the 50-day average, 51, which is resistance, the 200-day average, which is also resistance. That's the blue line there. And I don't think it's going to get above 52. So that's 5, what I call lines in the sand, providing us some level of protection in the event institutions want to do some bargain hunting and buy Cisco at 48. So here's the trade we're going to do. I want to make money anywhere below 52. That's all I want to do. And so to do that, you can't do that with stocks, but you can do that with options. And so what I'm going to do is sell a credit spread right at this line in the sand. I'm going to sell the 52 calls and then buy the higher calls. Wow, that sounds complicated. It isn't. Get the guide. I'll tell you all about it. It's quite simple once you learn it, and you'll be super motivated once you do a couple of practice trades, because you'll find your win rate will probably be 90%. There it is. It's just open right there. See, it's bouncing already a little bit. So I'm not in a big rush this morning, Brandon, because I am expecting some level of a bounce. And if that does happen, we're going to be able to get more credit up here. All right, so I'm going to sell the 52 call. That trade will make money anywhere below 52 over the next couple of weeks. So that's the trade, Brandon. The idea is quite simple. Draw a line in the sand, You make money on the other side of it.
And we've done this every week, and just watching your whole synopsis of the entire Cisco brand, the chart, that looks like a good trade. So 52, is that your line in the sand there? 52? Is that where you're going to put that thing? It looks like that's where you have it drawn. And we're just hoping, just to simply put this for everybody watching, we're just hoping it doesn't get back to 52, and that's the play. And if it doesn't get back to 52, we're good to go. And that's that simple. And so right now it looks like it's sticking around 48. 40 is still bouncing around there. So what kind of credit are we looking at right now?
Let's go look. I'm going to use a simulated environment. I don't take these trades that I do publicly. And so where Cisco is today, we are going to sell. Usually what I do is sell 15-day options. And so down below here, I have the trade I want, and it's only showing a 4-cent credit. All right. So if I want to get more money than 4 cents, what I would have to do is drop my line in the sand, maybe to 51. I'm not prepared to do that, especially watching the chart. The stock's starting to bounce a bit. All right, I'm expecting that to continue, perhaps up to these bottoms of these bars here. And look at that, it's bouncing. It's bouncing. And so as it does that, the credit is increasing. All right, here's what I'm going to do. I'm going to fish. I'm going to put a credit in at 10 cents. And again, let me just illustrate this. Right now, the spread's worth 6 cents. And if Cisco continues rising, then the value of that credit spread will increase. Look at it. Here it comes. It's bouncing. So good, bounce. I don't think it's getting above 50. It might, but I don't think so. And now I'm at 10 cents. I'm going to grab 10 cents on this one, and I'll explain this in a minute. I'm going to sell this for 10 cents. Go back to monitor here. And this is under working orders. You can see there's my order for 10 cents, the current mid price, 10 cents. There's a very good chance that will fill over the next few minutes. And I'm not going to decrease my price. I'm going to leave it sitting there, and I either get it or I don't. I'm not, I just got it they just gave me 13 cents. So how did that happen, Brandon? I asked for 10 and they gave me 13.
I don't know. Sometimes that doesn't happen to me ever, but good for you.
Well, the reason it does, though, is that in the morning after material news like this, option traders are coming in droves. And they're like, give me some Cisco options. I want some Cisco options, like Mike. I want Cisco options, and market makers are just filling all these orders that are coming in, and it's actually quite common that you can get these wild fills, but only in the first, let's say 15 to 30 minutes of the day is that possible, which is why we do this show at 9:15 Eastern so that we can catch the extra premium at the open. And we just did for 13 cents.
Yeah, now, we'll take that every single time. Nice job, Mike.
All day long, right? Now, I'm going to pull up a little spreadsheet here. I want to show you the trade if anybody's interested. The premium will 10 cents, I would say, is still quite likely that you'll get 10 cents. And so what I want to do here is build the trend. I didn't have my spreadsheet up. I forgot to pull it up. So let me pull that up here, and then I'll just write out the trade that I just did. And so anybody that wants to follow along, you'll have it. All right, so here's the trade instructions. The stock is Cisco. And what I just did, just to recap here, we sold the March 1st 52 calls. So we sold the 52 calls, and then we bought the 53 calls. So this is what we call in the trading world, in the options trading world, a credit spread, and we ended up getting on this one 13 cents. Now I would put this in for 10. I would take 10 all day long on this, because if you sell a spread for 10 cents, your max risk is a $1. If you sell a $1 spread for 10 cents, the max risk of that trade is 90 cents, and that is about an 11% return on investment. So my minimums on these are 10%. I don't put these on unless there's a 10% profit potential. Now the most important part of this system is exiting for losses. All right. So it's possible that Cisco rises back up above that line in the sand. It's going to be very hard for it to do it, but it's possible. It happens sometimes. So in the event that happens, rule number one in trading is risk management. And so we're going to take this off for a loss if the stock closes greater than the short call strike, which is 52. So really easy. Do nothing on the loss side unless the stock closes over 52. If it does, buy it back, take a small loss, move on to the next one. So that's the loss exit. I put that first because that's the most important thing. And then on the profit side, what you do is you put a GTC order in to buy this spread back for a penny. Good till cancel. And if Cisco, drops hard, you'll be out of this. You could be out of this trade in 40 minutes, like we were on Disney. So that's a good one, Brandon. What I want to see now, of course, is what's the stock doing? See, it came up.
Yeah,
this is beautiful. So, when I first put the trade out there, the stock was down here, and there was like 4 or 5 cents, and then the stock went up above 49 here, and that's where we got our 13 cents, and now it's dropping back down. So I would say there's a good shot on this trade that we might end up taking this off, by the end of the week, based on this movement I'm seeing here.
Oh my gosh. Yeah, you filled that thing perfectly right, almost at that bottom ticket, looks like. So very nicely done. I think this trade's going to play out nicely. I honestly do think, well, we're just watching the action here. It's not going to spike up, and I think it's going to kind of drift and stay around that area, it looks like. So well done. We do have a question about a chart. This is live, so we do have a question about a chart in the chat. If you want to take a look at it in the meantime, it's TWLO. So George is asking about that one.
Is that George?
Yeah.
I know George.
Yeah. Hey, George.
He's a great trader. Hello, George. Oh, baby. Yeah, I like it. I feel like a vampire sometimes. Bad news is the best. And what I feel bad sometimes, but not really. I don't feel bad. It's a game. It's the stock market, the options market. We're being really smart with the way we trade, and on the other side of our trades are losers, but that's what the market maker is there for. So what I love about the chart technically, George, good pick, is now there's some earnings on Twilio. I was looking at this earlier, but what's really compelling about this one is the big drop, of course, but now as I'm watching the stock, it's now below this blue line here, and that blue line is the 200-day moving average. It's a very important line in the sand that's drawn for you by technicals. And if you go back over the chart here, you'll see how the 200-day average over here was support, and then here became resistance. The stock came down, and then it busted up above the 200-day average, which is now resistance. And then after the announcement, it's now back down below this level, which is now resistance. So that's a line in the sand that's built for us, and that could very well keep the stock underneath the 200-day average. Now, the next thing to check is the news. So you can go to a lot of places and check the news. You can go to Yahoo Finance. There's many places. And I'll just type in Twilio, and we can see what the news is. The news is obviously bad, but I want to make sure that it's really bad. And ideally, they've lowered their future guidance. So this is an earnings play. Now, this is what I don't like about it. It's mixed. So they announced their earnings topped estimates, which is good news, but their revenue outlook disappoints. So they beat their earnings expectations, and then they said, well, next quarter, our revenue is not going to be as much as we expected. And so they lowered their future guidance, and that has propelled the stock further down. Now, what I would have loved to have seen, Brandon, is that they missed their earnings and they cut their revenue outlook. That would be ideal, but we don't have it. So the question becomes then, and what that tells me is that, man, if this 200 holds, they did beat on their earnings. They've lowered their future guidance. We could see a bounce. So it's not an ideal. The probabilities are not fully aligned. And for that reason, it's a little bit, there's not the probability I like. Already you can see here that Twilio is bouncing right off of this 200-day average. It'll probably hold today, I imagine, and then we'll see some sideways, and then I would say most likely a recovery of some sort, probably filling the gap. 70 resistance, 75 resistance. All right, now let me just play around here. If I did anything with this one, I wouldn't get any lower than 70. All right, 75 would be ideal. If I could get 75, if I could draw a line in the sand at 75, then I would do it. Now, I would only do it if I got enough credit. So I'm going to go see what credit's available on Twilio, and let's just see. If there's 10% there, I would do that trade. Again, I think there could be a bounce here. Positive earnings, lowered future guidance. That's mixed, positive and a negative together. We could get a bounce. And I imagine that's what will happen, similar to Cisco. But anyway, let's see what's there at 75. That gives us plenty of room for a bounce. If it bounces to 70, then that'll probably hold for the next couple of weeks. And then 75, just don't see that happening. So let's just go take a look on Twilio here. And I'm going to go into this Thinkorswim environment. And I generally like 15-day options. And then I'm simply going to see what's there. And you can see here, there's no credit there. It's too far away. So the only other thing I can do is say, well, what if I went to 70, which is as close as I would get? I would not go below 70 on this one because of the mixed news. And you can see here that if you sold the 70, bought the 71, there's only a penny there. Unfortunately, Brandon, this one, although the stock's tanked, is just not a really great sniper trade.
You presented that well. I mean, I like how you were able to break apart what components you like and what components aren't there in this trade, and that makes sense to me. You're looking for something that has kind of have all the boxes aligned. That way it makes it less of a risky trade, and that makes sense. So hopefully, George, that answered your question there on TWLO. I appreciate that breakdown, Mike. Cisco trade. What? Is it still good? I just want to check back on the Cisco chart before we wrap things up.
Let's check.
Oh, yeah, we're good.
Yeah, we're good.
Yeah, we're good. Yeah, we're good. It's at 49 still. We're golden. Oh my gosh. How long do you anticipate holding this bad boy?
I would, what is it? Thursday? We'll probably be out of this next week.
Perfect. Perfect.
We'll be out of it sooner if Cisco breaks below 48. I just don't think that's going to happen. I don't think 48 will be breached. That's you can see over here, that was a support level right over here. So I don't see that happening. I think Cisco might bounce, but I don't see it above this red line, which is the 50-day average, or 50, a round number. That's where these lines in the sand, this is really, if you're a new trader, I would say the strongest thing you can put on a chart is horizontal lines at round numbers. Look at 50 here. Resistance, support, support, resistance, support. Look over here. Back over here, the stock bounces off 50. So these round numbers tend to be natural support resistance levels. So Cisco may rise from here, but it's going to have to really fight the trend because this level here at 50 is mega strong. So for us to get into trouble, the stock's going to have to bust up above 50, the 50-day average, 51, which is also support resistance. And then we're so far away on this, Brandon. I mean, something good's going to happen to Cisco for it to get back up to 52, in my opinion. I think this is a done deal on this one.
Yeah, you got to take one of those things they call a miracle, right? It might take something serious there, Mike. Well, I appreciate you putting this trade on. I appreciate you going over that Twilio trade or that Twilio chart for George here, Mike. As always, I think your reads are excellent in the market. One of my favorite people to trade with, just because of your trading style. I think it's excellent, and I love this fast approach. The high probability trades are some of the best stuff that I love watching here in the market. If you have not gotten Mike's Sniper Guidebook, go ahead and pick that up right now. We're going to put a link in the description. It's right below here, so you can click listing and go right over and get that guidebook. It's going to teach you the way that he trades so you can trade along with Mike. Go get that right now. Anyway, as far as everything else goes, we will see you next week back here, same time, same place, so that we can go over the Cisco trade and see how things turned out for Mike. We will see you in the next one.